The biggest real estate market in North America is New York City. We all know that, but how does it compare to the biggest market here in Canada, Toronto? They have their comparisons, they have their differences, but which one gives us the most bang for our buck? Should we be looking to New York to save us from expensive Toronto real estate? Let's dive into the numbers and find out. Starting off in New York City, it's the economic powerhouse of New York State and arguably the USA, and holds some of the highest salaries in the entire country. 43% of people earning over six figures. The average salary hovers around $102,000. That's a lot of money for the average person. And now let's talk expensive, because it's not how much you make, it's how much you keep. The city's cost of living doesn't play nice with your wallet. Housing costs alone are a staggering 385% above the American average, while overall cost of living is 128% higher than the US average. That's more than double. If you take value from these type of videos, please help me by subscribing, by hitting the like button, and do yourself and a friend a favor by sharing this video also. If you're looking to secure a New York apartment for yourself, that's gonna run you an average of $4,416 per month. And that's without any fancy frills. The average Manhattan studio will run you $3,025 a month. That's another way of saying compact living. So if you enjoy those cozy spaces, a Manhattan studio might be right for you. On the investment side, this is very interesting. The cap rate in New York is higher than in Toronto. The average cap rate running at 5.38%, while Toronto, you're lucky if you're getting 4.5%. Why is that? It's because rents in New York are really, really high in comparison to the purchase price. However, the barrier of entry in New York is super high, okay? Rents are through the moon, the highest in the country, but prices are just as high, making the barrier of entry difficult for Americans and especially Canadians with the dollar value. Just a studio unit in New York sells at an average in 2023 of $785,233, while in Toronto, that same studio is going to sell for $440,000. So when you factor in the currency conversion, that is an enormous barrier of entry, even though cap rates might be higher. Now let's pivot to Toronto. Our city is no slouch to attracting foreign investment. We've attracted billions upon billions of foreign investment over the last decade. Now, while our city's expensive lifestyle reflects its world-class status, there are still lots of opportunities within the city if you know what you're looking for and how to do it. And that's why people like you pay attention to people like us, because we find these opportunities, dissect them, and present them to you on a regular basis. Look, we all know New York is expensive. We know Toronto is expensive. We're all complaining about housing prices and food prices, et cetera, et cetera, et cetera. The reality is these are world-class cities and they're going to be expensive. And over the long term, they're probably going to be more and more expensive. Here's the good news. Toronto's market is resilient. Even though we've seen prices come down over the last 18 to 24 months, we have a long history of price appreciation. And this is a market that's not going away. We've averaged just under 7% of price appreciation in real estate since the 1970s. Very few cities have a similar track record to Toronto. With so much talk about buying property in the US with changes that have happened here in Canada, very few people are talking about the exchange rate. I mean, yes, in terms of dollars, things seem cheaper in the US, but with an average American dollar costing $1.38 in Canadian, it can be tough to make sense of these investments when you factor in the exchange rate. Think of it this way: in Toronto, your real estate dollars stretch further. Our market momentum is not just skating by, but scoring goals. Remember, we've averaged just under 7% appreciation since the 1970s. Find me another city that can do that. Post it here, prove me wrong. This is some of the best real estate you can get in North America. This trend is here to stay. It's expected to continue with the demand for housing, all the immigration, and the short supply of housing we already have. There's no stopping this trend. If interest rates should begin to decline later this year in 2024 and into 2025, we will see a resurgence in Toronto real estate. Look, choosing Toronto means strategic investment. You're investing for the long term. You're not looking for short-term gains. You're not looking for a quick flip. Okay? Investing in Toronto means you're thinking 10, 15, 20, 25 years out. Where is the real money going to be? Where is the real value going to be? Where is your value going to maintain itself and show good appreciation? My bet is in the next 25 years, Toronto is going to be one of the best places you can find. Like every country, Canada does have its problems. I'm well aware of them. I know you're thinking about it. This is not a pump up for Canada. This is just the realistic truth. Canada has its issues, but there are worse things out there, believe me. Think about it. There's a reason why Canada gets all this population growth. It's all coming from immigration. Why does half the world want to come here? Is it because it's worse than where they are, or is it because it's better? So even though we have our issues, we are still doing better than most. We have a strong and dynamic economy. We have an educated population, and we have a history of prosperity. And I know we can get out of this. The future is bright. Thank you for joining us. Keep investing intelligently and be proudly Canadian.